Joining us now is MacKinnon, global macro strategist at VTB Capital. Thank you so much for joining us. It seems that actually the markets were expecting what the Fed announced, and they were hoping for that little bit more.
Well, I think the Fed delivered the minimum that the markets were looking for in terms of Operation Twist. Certainly, I think the backdrop for equity markets is poor at the moment. There's still ongoing worries about the eurozone debt and banking crisis. We had the credit downgrades for US and Italian banks, which is also weighing on financials. And so the equity market picture isn't so good, as I think you've mentioned in your programme throughout the morning.
Yeah,
they picked up on the downside risks for the economy and for for global financial markets as well.
Yeah, and a lot of money actually being shifted into these safer assets. But in terms of what we heard from the Fed, are they going to do more? Is there any glimpse of, we still have some ammunition left, which we're not deploying for now, but we're ready to act?
Well, the Fed has to keep its options on the table, but they are running out of ammunition, as they are on the fiscal side, given America's budget deficit and rising debt GDP ratio. So they are running out of ammunition. There are other things they could do, but there is a debate amongst economists about just how effective monetary policy is, particularly if we're in a liquidity trap, which I think we are, and particularly given the impairment to the banking sector's balance sheets. There's regulatory requirements on them to raise capital. There's I think a requirement for eurozone banks to be recapitalised. That's an essential part of resolving the debt and banking crisis.
And on the banks, how worried are you? Because it's yesterday we had this downgrade for the U.S. banks, this downgrade for the Italian banks.
Sure.
Now there are rumours that actually the French banks are looking for sovereign wealth funds to come and invest money, especially in the Middle East. But until it's resolved, the situation is very uncertain.
Well, I think so, and it was interesting that the ECB yesterday released the eligibility requirements for collateral, despite the dollar liquidity support program that we saw announced last week. So it's clear that funding pressures, counterparty risk remains an issue. And for as long as share prices of the financials continue to come down, there'll be increasing pressure on capital, and that's why the French banks are looking for outside sources of support. But I think this situation is going to continue for a while yet, and I think the end game for the eurozone crisis has to be some form of debt restructuring for those countries that have fiscal problems, but it has to go hand in hand with bank recapitalisation.
But the more we leave it, of course, the more pain we're going to take once this is done. Are we going to see a Lehman-type event? We're talking also about U.S. banks. They're not now too big to fail because the risk has been taken out. But if there is such a shock, what does it mean for world markets?
Well, I think if we had a Lehman moment or some sort of banking crisis, which we can't rule out for sure, and I do think that as part of the end game for the eurozone crisis, it's quite likely that we're going to see a major banking casualty. But I think in the interim, it's all part and parcel of this rather downbeat, if not bleak, assessment for global markets, for the global economy going forward. So I think for as long as particularly eurozone policymakers try and delay the day of reckoning and patch it up, we're going to be vulnerable to periodic, sporadic crises in the markets.